Hello and welcome back to the Crypto Chronicle. Welcome back to my YouTube channel, guys. Thanks so much for being here. Today I want to talk a little bit about what on earth just happened this week. That was a crazy correction. I was a little bit scared. I'm pretty sure everyone was a little bit scared. And I think that we were not really sure how low it was going to go. A lot of people were saying it could just close the CME fair value gap, which was around here. And some people were saying that it might even go down and touch the 73,000 support around here, and we'll yet to see how that's going to go. But for now, we have seemed to have found a little bit of consolidation around 85,000, bottoming around 79k with the weekly wick going down that far, which I'm pretty pleased about. And for me, this is a great accumulation zone. So without further ado, let's get into this. Today, I want to talk about the future of Bitcoin, where it's going, what it's doing, and what we're going to see. I think an important part of that is the correction that has just happened. We normally see massive corrections in a bull run. Raoul Pal posted this on Twitter. This is the 2017 cycle, which is a very comparable cycle to this one. If you look at my previous videos, you'll see why. But essentially, it seems to be lining up quite similarly with the moves in this one. And what we saw were 5 corrections of around 30% or more. And it is no coincidence that Bitcoin is doing the same thing now, going down around 25 to 27%. Similar time of year as well. What is interesting about this is that people seem to be very fearful. People think the top is in just because Bitcoin has reached an insane height of 108k. But really, this is nothing unusual. Bitcoin hasn't really done that much. It's done a 400% move since the bear market, maybe 450%. I expect to see it go higher, and I think that we're only a little bit of the way up, to be honest. I think we're quite close to around this region, to be honest with you. In addition to that, we've seen altcoins like XRP go down 50%, Solana go down 50% in this bull run. It's not unusual to see altcoins go down 50 to 60% in a bull run, whilst Bitcoin corrects slightly less than that, but still quite significant for a large asset. I want to talk to you about the Global Liquidity Index, Global M2. The Global M2 is a measurement of the world money supply that has been essentially printed through things like quantitative easing. We see the global liquidity go up, and as you can see, it has a very nice correlation with Bitcoin. This is a custom chart that I made. Global M2 with a 10-week lead. So if we actually turned that 10-week lead off, it would look something a little bit more like this, where we see these peaks happening a little bit earlier, but we know that if we add the 10-week lead in, they actually line up really well, as you can see here. And I've drawn these green lines here to just mark where there's been some brief local tops in global liquidity. And we can see here that we have some nice local bottoms around here lining up too. I fully expect this local bottom in the global liquidity to match up nicely with where we are right now. Are we going to go lower? It's possible. It's hard to say. We might just stay around this 85k region and consolidate here for a while before heading higher. As you can see, global liquidity has already made a leg up higher, and I fully expect Bitcoin to be following suit. Now, when this happens, I don't know. What we've got here is the length of time that global liquidity was in its bottom stage was 30 to 40 days. If Bitcoin follows that, then we should be heading much higher by the end of March, early April. I wouldn't be surprised if by then we get back to around the 9900k region. Depending on what global liquidity does, it could head much higher and then consolidate, as we've seen in the previous Bitcoin cycles. Liquidity goes up, we consolidate, we correct, goes up, we consolidate, we correct, goes up, we consolidate, we correct, and it goes up again, and that's the blow off top. And that's the end of the bull run, essentially. That's the cycle top there. We can see this is the case in previous Bitcoin cycles too. Where we're going to go, I don't know. It could be 300, it could be 200, it could be 500k. We don't know where it's going to go. But one thing we can use to help us navigate this is the ISM Manufacturing Index. This is another custom chart that I've made on TradingView, and it outlines the ISM Manufacturing Index here in blue against Bitcoin in orange. So what we have here is the peaks in the ISM Manufacturing Index lining up perfectly with the peaks of Bitcoin's cycle top. The ISM Manufacturing Index is essentially a measurement of corporate earnings, small business earnings, CEO earnings, that kind of thing. And it measures the overall sentiment and success of businesses in the US. And as a result of that, people and businesses tend to have more money, and that is why they tend to invest in risk on assets because they can afford to spend a little bit more money to do that kind of thing. It's the same kind of thing with global liquidity in that there's more money supply, people feel they have more money, so they put it into risk on assets. In addition to that, where there is more money in supply, the actual value of that money is lessened due to the increased decline in scarcity. So, in order to combat that decrease in value, people also put their money into risk on assets, which tend to outperform currency in those periods of time, like the S&P 500, like Bitcoin, like NASDAQ. It's all the same thing. They all line up perfectly with this. The reason why this chart is interesting is because of the COVID pandemic. In 2020, we saw a sharp decline in the Bitcoin price, moving down quite a significant amount, around 50% when this happened. The entire stock market followed suit. Interestingly, after this happened, we saw a early cycle top. And now this was partially due to the classic Bitcoin halving cycle lining up perfectly. However, the reason we had an early cycle top is because the governments in the world all decided to stimulate the economies, and although we had a sharp decline in global liquidity and business earnings around here in 2020 when the pandemic was in its full height and businesses kind of just shut down all over the world, we saw a massive blow off top in the ISM index around March 2021, and that correlated perfectly with the early cycle top in Bitcoin. Now, there were many reasons why we had this 50% decline here as well. However, I would argue that the main reason is due to having an early top. But we did see things like China banning Bitcoin and things like this happening as well, which I think massively led to this bigger decline here. What we also saw, though, truncated double top in late 2021, around November. Now, this is actually where you would kind of expect the actual cycle top to happen. And I don't think it's a coincidence that we saw the double top around this exact time. We see that the ISM manufacturing index had a little brief rally back up, and it held in this kind of 60 plus region, which is where we typically see the cycle tops go up. We saw the ISM index hold its value of 60 around here before declining, and that lines up perfectly with Bitcoin going into the bear market. This also happens to coincide with things like the FTX crash and the Luna crash. However, to be honest with you, I actually think that this would have happened regardless, just because if you look at the ISM, it's too correlated to really think that there were many other causes for this. And if you look at global liquidity, it's kind of the same thing. Interestingly, this early cycle peak was around 1,197 days. That's basically 200 to 300 days shy of a normal cycle. What we have here is a line extending to the standard cycle about 1,400 plus days, which happens to line up perfectly with the double top. Now, what I'd like to point out here is if we see another early cycle top, which would be around March now, basically, it would be very early because Bitcoin reached 100k in December, and that would be a crazy early double top. Now, that could make sense if we move this line, back to around here, you can see it lines up kind of with around March or April. It's possible we see a top around here since we did have an early cycle top originally. However, my base case is that we have the standard cycle top from the beginning of the bear market, which was around here, and we see here that this is around 1,400 days as before. This leads us to late 2025, and it's very possible that depending on macro conditions, we could extend this into very early 2026. Where this goes in price and time, I do not know, but what we've seen here is that the ISM manufacturing index for the first time since here has gone from below 50 up above 50. It happened here, it happened here. What do all of these have in common? The cycle tops. Okay, this is what happens in the cycle tops. We have the ISM manufacturing index coming below 50, going above 50 in a massive uptrend in that last macro full year. What do I mean by macro full? I mean the macro seasons are split up into years of 4-year cycles. Instead of it being 4 seasons within 1 year, we have a season per year. We are currently in the macro full season. This is 2025, and that tends to correlate with risk on assets going up. After that, we have macro winter. It's called that because it's really gloomy, and actually we enter the bear market around then in 2026. I would not be surprised if we see this all line up perfectly. Where does the price go? I don't know. This is a random prediction. Well, it's not that random, but essentially I've drawn a price trend here from the late 2017 cycle top to the early 2021 cycle top to the expected cycle top of 2025, and it brings us to around 300k. Do we go there? I don't know. Maybe it's lower, maybe it's higher. We'll see what happens. Many things can affect this, not least macro condition, but also sentiment and various other aspects of the macroeconomic environment that we are in. Now, I just want to address one more thing, guys. The reason why I think global liquidity will continue to go up here is because we see the great stall of China. I've mentioned this 3 times now, guys, but look, essentially what we're seeing here, I mean, this is a little bit out of date, but China's economy is stalling, and now it's in a period of debt deflation. What does this mean? It means they're screwed. Basically, China is screwed. They need to stimulate their economy in order to get out of the deflation. How do they do that? By printing money. How do they print money? Well, unfortunately for them, they've pegged their currency, because it's crap, to the US dollar. Now, if they stimulate their currency, it weakens, right? And if they do that too much and the dollar holds a strong value, the currency will essentially depeg, which is even more catastrophic. So they are forced to need a weaker dollar. Now, we will likely see a weaker dollar because it boosts economic trade around the world, since it's the global currency, global reserve currency. But I essentially think that Trump will essentially bring China to its knees and say, look, we know what situation you're in here. You're screwed. The only way you're getting out of it is by stimulating, and you can only do that if the US dollar's weakened. We will weaken the US dollar for you, but you need to agree to these trade conditions that we want first. And I would not be surprised if they do it, because they're essentially screwed. Moving on, we do have some pretty bullish news. Texas Senate Committee approves the Strategic Bitcoin Reserve Bill. Now, this hasn't been moved in the Senate yet. It's going to be put through the Senate, and unfortunately there has been some other strategic reserve bills that have been declined by the Senate, but some of them, like in Utah here, have passed the House. In addition to this, we have the first ever White House Crypto Summit hosted by President Trump, and we will see him being joined by the White House AI and crypto czar David Sachs. This is a great time to be accumulating, because we have all of this bullish news to come. We have the ISM manufacturing index on the way up. We have the global liquidity index on the way up as well, which usually leads Bitcoin. So I think we're going to head higher. I just want to say though, guys, this is not financial advice. This is just my personal opinion. I have personally reaccumulated in this zone, and I think that it's a good idea for me. You guys need to go out and do your own research and figure out for yourselves, because I'm not a financial advisor. In addition to this, we have the fear and greed index, really fearful. Earlier on this week, we were in extreme fear. If we look, we reached a low of 10. Extreme fear, 10. Bitcoin was 82,000, maybe 79,000, depending on where you look on the chart. And we reached 10 in fear. Can you believe this, guys? I mean, this is the highest Bitcoin's ever been. 3 months ago, this was the all-time high for Bitcoin, and people are as fearful as they were when we entered the bear market. I'm taking it as a great time to accumulate, because, as Warren Buffett says, you need to be greedy when others are fearful, and fearful when others are greedy. If we also look at the altcoin season index, we're in a Bitcoin season now, which is the first time we've been in a Bitcoin season since October, which is great news, in my opinion, because we never go and see a massive blow off top alt season without entering the Bitcoin season first. So I'm going to show you this, guys. If we go back, we had an alt season here. It wouldn't have been possible without going into this Bitcoin season first, where you see Bitcoin dominance increase. We had an alt season in early 2024. It wouldn't have been possible without a prior Bitcoin season. We had an alt season in 2022. This was the bull run, basically, the big blow off top alt season. Here we had a Bitcoin season, altcoin season. It has to go all the way down to go all the way up. It's as simple as that, guys. 2021, same deal. Bitcoin season, altcoin season. It goes down here, guys. And you know, if we go all the way back to 2019 as well, we had DeFi summer, Bitcoin season. This was the bear market in 2018. In 2018 January, this was the cycle top. We saw 100 on the altcoin season index here. Not long before, we saw the Bitcoin season, okay, which is when Bitcoin peaked. All right, same vibe going all the way back. Look, it doesn't go back further than this on this chart, but you guys get the gist, okay? We're in a Bitcoin season. What happens next? Eventually, an altcoin season. We also saw that the US SEC has announced that the Coinbase case has been dropped and dismissed. This is incredibly bullish. We see here this is an official statement, guys. For the last several years, the Commission's views on crypto have been largely expressed through enforcement actions without engaging the general public. It's time for the Commission to rectify its approach and develop crypto policy in a more transparent manner. The Crypto Task Force is designed to do just that. So this is really, really bullish. And, you know, everyone's saying Ripple, when is Ripple going to happen? I feel quite bullish about XRP. I'm holding XRP. I really think that they're dropping all of these other cases. They're just taking their time with the Ripple one because it's a little bit more complex. There was a judge that said, okay, look, this isn't a security, but there is something else. I think maybe with the Ripple one, we see a settlement rather than a pure dismissal. But at the end of the day, once that case gets closed, XRP will probably pump. I want to just talk through my portfolio distribution again. What we've got here is not many changes. I've updated the amounts based in dollar value, but I've not really, I've added to my Bitcoin position. That's what I've done. So I've added a little bit there. I expect to add more in the coming couple of weeks whilst we stay in this little consolidation zone. It looks like my Elastos position's gotten even bigger, but that's only just because it's gone up in value recently a little bit. My leverage futures trading is lower, mainly because I got wrecked by this move to the downside. I wasn't expecting such a sharp decline, so some of my longs got liquidated, unfortunately. They weren't that big positions. As you can see, it was only 5%. And this is the thing, guys. If you're doing futures trading, only do it. It's a little bit like gambling to some extent. Only do it with 5 to 10% of your position, of your portfolio. Same thing with meme coins. Okay, don't go too much out of the risk curve. Now, I'm saying that with a massive Elastos position, but it was one of my first entry points into crypto, and since then I've been doing a lot of other, accumulation of other coins. I am a Bitcoin maxi to some extent. I think Bitcoin is king. However, I'm also a profit maxi, and I think XRP is going to outperform Bitcoin. I think Sui is going to outperform Bitcoin, and I haven't added to my Elastos position in months and months. So whilst I am bullish about it, and I expect it to outperform all of the rest because I think it's a fantastic fundamental coin, and I think we'll see a lot of increased demand for it once all of the projects hit their full potential this year. I've added to my index funds position. I add to this every month, so that's nothing really, no change there. So anyway, guys, thanks so much for watching my video. I really appreciate your time, and please hit that subscribe button, ding that notification bell, give me a like, leave a comment, let me know what you think, and I'll see you in the next one. Bye for now.